And should we talk about like how to be an investor and how to review like company financials when you get a quarterly results?
Yes, because rumor has it Badger had some cash register dinging, chinging, ding, 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 ching, ching, ching.
Yes, cash registers were chinging for me last week because Intuitive Surgical dropped their latest quarterly results, Q3 results. And I thought, so we got really good feedback on episode 103 and 102, where you took us through, I think, some of the PayPal numbers with fiscal.ai. And then last week, I looked at Novo Nordisk. So I thought I'll come back again. We've just had a company report quarterly results. It's a company I'm pretty close to. It's like the second biggest company in my investment portfolio. And I thought I'd show you how I use these kind of tools to actually review a company. And I can do this in like an hour or two now. It might take you longer when you come to it for the first couple of quarters, but each time like you're learning more. I'm going to give you like a whirlwind tour through the most important aspects. All right, so we're going to start with fiscal.ai, and we're looking at Intuitive Surgical, like the main homepage. We saw this last week. And as usual, we've got like some nice headline numbers, market cap, PE ratios. And I'm going to say, like, this is a great home base to start your research. But what we're going to look at, because they just reported quarterly earnings, we're going to go and look at the actual quarterly earnings, which you can get if you go to Intuitive Surgical IR, Investor Relations, but you can get them in fiscal.ai too. And every quarter, typically, you'll get a couple of things. You'll get a report, which is like the 10Q, and it's literally like a PDF document that you download and you read through. And then you get like, usually, not all the time, you get a bunch of slides that you can look at. And again, you can usually download that. It's like a PDF you can download. And if you hang around like an extra day or so, you get the earnings report, which I highly recommend you listen to with your ears, not read the transcript, because you get a lot of human nuance out of hearing like the founder, the CEO, like the leadership, the CFO talking about the company and fielding sometimes quite tough questions from analysts.
Badge, a side note there, so a quick side note. It's fascinating. There have been very, very good and serious investors who legitimately put a lot of stake in the literal tone, meaning it's kind of gets maybe not into woo-woo stuff, but certainly like, oh, they were downbeat, or oh my God, they couldn't be more excited. They were jumping out of their pants. That is, we can assure you, a legitimate data point.
Yeah. Yeah.
It's not the only data point, but it's a legitimate data point.
Yeah. Yeah. Like as poker players, right? You can hear something in the inflection and the confidence, and you can hear when they're winging it a little bit, because these are live. Like these calls are live, and they're there on the call with analysts, and we get to hear it all. So it's useful. Now I'm going to jump out of fiscal.ai just because I've taken the report, the slides, and the transcript, and I've just dropped them into PDFs, and I want to show you guys those. But before I do, I'm going to say this is my starting point, actually, and it's something I did a year ago. Like Intuitive Surgical is a company I know well, and so like you don't have to do this, but for companies I was doing it because we were scaling the YouTube channel. I built like a nice fancy deck where I explained the thesis and what I thought the competitive position was, and I pulled out some financials. Like you can find this on our YouTube or link to this video from like a year ago. But the reason I'm reflecting on it now is I had an investment thesis. So my investment thesis for Intuitive Surgical has pretty much always been pretty close to this, which is, if you're not on the YouTubes, like this is very visual, get on the YouTubes. But my key thesis is like they are a market leader with a massive competitive edge that I feel is almost insurmountable. They've got, I'm tongue-in-cheek calling it a robots and blades business model. It's the razor and blades business model. Like they make most of their money from the instruments, which they get used for a couple of procedures and they're thrown away. The actual robot, the hospitals buy or lease the robot, but most of the money they make is because they buy, these accessories that are consumables. that the company is unlocking new opportunities with DaVinci 5. It's its latest version of the robot, essentially, launched a couple of years ago. They've got a rock solid balance sheet. And really interesting right now is they're collecting really interesting procedure data, which I likened in my thesis a year ago to Tesla driving miles. That with DaVinci 5, which is 10,000 times the processing capacity of previous iterations, they're capturing video data, they're capturing like the surgeon's movements, and they've got all this data in a big repository. And now they can start to, a bit like FSD with Teslas, they can start to use that massive data from millions of procedures to start to do some quite interesting things. And we're now starting to see that. So let me take you into this quarter. So I've just downloaded from fiscal.ai the 10Q, which starts off with like a nice, actually pretty story that's come from the board that tells you what are the highlights of the latest quarter, what's their outlook, what's coming up, and I'll take you into a few bits of that. I've also downloaded the investor presentation, which is some nice, handy, easy to read slides, and I downloaded the transcript. So I've got one thing I want to point to in the transcript. So let me just take you on a quick tour of the highlights of the Q3. So I haven't highlighted all of these financial numbers, but if you read through them, essentially good growth ahead of what they expected. So they've grown both the number of robots they've deployed into hospitals, they've grown the number of procedures they performed, they've grown revenues, really solid. I wanted to call out something that's a little bit unusual. They repurchased 4 million shares in stock. That's great. That's kind of directionally about 1.2% of the share capital. So that's like a real 1% increase in value in your pocket when the company does that, essentially. Now, if you read through the story, the company have placed 427 DaVinci surgical systems in the most recent quarter, of which 240 were DaVinci 5. So that's like more than half of the new systems are DaVinci 5, compared to third quarter last year, or a year ago, where 110 out of 379 were DaVinci 5s. Makes sense. It's a new system. It's scaling up. But this is helping me validate my thesis that DaVinci 5 is rolling out, becoming a bigger part of the platform. And we can see it in the numbers. I've got some yellow flags in here as well, though. Like, it's not everything is always glowy. Share-based compensation of $206 million. So that's kind of high, but relative to revenue of $2.5 billion, it's reasonable. It's certainly not like an Axon. We talked about that in a recent episode where I think more than like a quarter of revenues were going to insiders. This is a much more sensible, like less than 10% of revenue. Still a big number, but it's not egregious. They've also, I was focusing on their fortress balance sheet. They did have $8.5 billion in cash. That's gone down, another yellow flag, gone down by over $1 billion because of they rebought common stock. That's like the buyback, plus capital expenditures. Like they're actually building more facilities and they're increasing their ability to manufacture instruments. So again, when you read into the story, it makes sense. They're not spending the money on stupid stuff. So that's probably enough for that. If you were to go through this whole document, like you've got the financials, we talked about how to walk through the income statement in last week's episode. You can start to draw out some insights from this. Like here we are in the financials. Inventory is up $1.5 billion to nearly $8 billion. So there's a question for me to answer there. I haven't answered that yet. Why is inventory up? Could just be because the company is scaling. If you're scaling, you need more stuff because you've got more people buying your stuff. That would be a good reason for inventory to be scaling. A bad reason for inventory to be scaling would be like people are buying less of your stuff, so it's sitting on the shelves. So we can get a lot out of the numbers. But if that's like feels dense and not very pretty, then let's just flick to the investor presentation. Now, not every company makes one of these, but a lot of companies do. And it's a really pretty easy picture way of seeing what's happening in the company. And just like two slides I'll pick out of this because I think they tell the story really nicely. Here we are on slide 6, worldwide procedure growth up 17% for the whole year 2024 to the whole year 2023. So we're looking back a little bit, and you can see general surgery is up significantly. That now makes up more than half of all the surgeries that are performed. So, like growth of general surgery, this is intuitive coming out of its like little narrow space where it used to be just about like urology, prostatectomies, and those kind of operations, and now going into like appendectomies and a whole bunch of other operations, general operations, which massively expands the TAM, like the ability for the company to do more procedures in more areas, which is going to increase growth. And then the other slide I want to look at, because it's my robots and blades business model, there's a stop here quickly. Look at that pretty thing. Da Vinci 5, like this.
Looks like Wally.
Yeah, it does look like Wally. Yeah, yeah. It's a beautiful piece of equipment. But let's take a look at slide 21 in the deck, which is how the revenue breaks out. And revenue, we just saw up 17% year over year. 84% of revenue is now recurring revenue. So that's like, it's almost like a software company, not a hardware company, because it's making every year, it sells the robots, and that's like non-recurring revenue, but it also services the robots and it provides these instruments. And this is where, every year the hospitals own these robots, they're doing the procedures, they got to keep buying the instruments because otherwise they can't do procedures, and they're sitting on this like robot that's no use to them. That money's coming next year and the year after that and the year after that. So you can be really confident about the trajectory of the financials with a company that has high levels of recurring revenue. That's one of the main reasons I love Intuitive Surgical.
Badge, great job, first of all, in encouraging, and walking us through the process and on making this your second largest position and on the results. Monkey, though, wants to screech and holler about something adjacent to this that is very timely. And I'll talk more about this next episode probably. But you know what I did? Okay, you know what I did? I'm like, damn, that badger is one smart badger. And then I employed next step. I employed a fallacy. I was like, I gotta get me some of that intuitive surgical too. But damn it, it's already $194 billion company. And the best that, I'm not going to match his whatever 10,000% gains or whatever obscene number you have. So I'm too late. So note that I'm aware that this is a fallacy, but I nonetheless did it. So I'm like, I got to outsmart him. How am I going to outsmart him? And so I had been doing research on another young up and coming health robotics company, but it was this. But I was in my research phase, right? I wasn't yet ready to pull any triggers. But the superior results kind of just got me more motivated to start really digging harder. And you know what I discovered? I discovered, in part, that the co-founder of Intuitive Surgical, whose good name is Mr. Frederick Mole, who's he basically invented this thing out of thin air. He wrote the business plan. He funded it. He did all the things. He is a American physician, so he's a doctor, BA from Berkeley, MD from just all the fancy degrees. Really, I mean, he's just one smart fellow, obviously, right? He bought a massive amount of shares in a little up and coming health biotech called Procepts Biorobotics. And then, and so my thinking, really, not to overcomplicate this, is Who knows more about this field than this guy? Probably few, very, very, very few people on the planet. And so I accelerated my research on the back of sort of, I call it reverse engineering. When somebody like Mall buys companies of my $2 billion robotics company, I'm like, I'm going to pay attention to this harder than any other data point out there. And so I ended up really loving what I discovered in my own research. And I bought a couple of shares for the King of the Jungle portfolio. Now, side note, our good man, Ben Gal Tiger on Patreon. He's, I believe, works in the healthcare field, and he did some on the ground. I think he said he talked to urologist friends of his because Procept Biorobotics is a prostate surgery company, right? So he talked to his physician friend, and I believe the intel came back that this physician friend was less than enthused. Right. And I think Ben Gal said this is anecdotal and so forth, but it's an interesting investing moment because if you think about it, you get faced with this kind of mixed signals all the time. And sometimes investors overthink things and confuse themselves. I'm I don't think I'm guilty of this. When I see Intuitive Surgical becoming a company that's now worth $194 billion on the back of your research, and I saw how you participated and it basically made your career in some ways, right? And I see a person who knows this industry because he invented the damn thing, buying massive amounts of shares for higher than what they're selling for right now in the same sector. At that moment, technically, I'm like, how much more research do I need to do? Not much, right? At the very least, like, take a little nibble and then, follow up, and like, I don't need to be smarter than that. I will be because I'm going to do the due diligence and all that, but that's enough. And I'm not going to get psyched out by one anecdotal physician's viewpoint, probably because when paradigms shift, people know what they know and they're going to say, oh yeah, this newfangled thing, that's not going to work because my way is better because that's what I do for a living. So, yeah, you will get cross currents, but I'm going to outsmart you, and I'm going to and I'm going to make all the bananas with my little Intuitive Surgical Junior. Just you wait and see.
Good luck to you. I haven't looked at that one. I will take a look once you finish your DD if you're still happy with it.
Yeah, I'll do a Safari stock segment on it probably in the coming month. But the trade was posted in our Dolphin Trading channel for all you Patrons. But that's all it was. It was like, here's a ticker I researched. Here's what I bought. Here's a couple things I like. The rest is on you.
Bengal Tiger, like that guy's got good taste. He was just a crowded house concert at the weekend, I think. So adding incredible value to our Patreon. So thanks so much for that, Bengal.
Yeah. Rawr.
Alrighty. So I did a whirlwind tour through quarterly results for Intuitive. And I did want to quickly, before we hand over to you to give us a tour of PayPal, I wanted to quickly headline an incredible guest that we're hoping to have on the podcast next week. I'm not joking. One of the world's highest volume robotic surgeons. He wrote the UK's NICE guidelines for robotic surgery. That's like the National Institute guidelines. And he's a world leader in training other consultants in how to master the Da Vinci surgical system. So this guy knows his onions when it comes to Intuitive Surgical. I know the company. He's hands-on and teaching other consultants how to use it. Like, we could not get a better, more expert guest to take you inside the operating theatre and really understand this technology from the practitioner's point of view. So interview episode coming up, hopefully in episode 105. If you're a fan of Intuitive Surgical, or if it's on your watch list, definitely must watch.